Very interesting, because even as the July 9th deadline nears, we know that there is now a stalemate which is continuing over trade talks in Washington between India and the US negotiators. And this stalemate is now because India is completely sticking to its red lines. This is what we are learning. In fact, the team is now once again extending its stay in Washington, D.C., and there was one extension which was yesterday. There will be one more. Where the whole conversation seems to be stuck is over two pockets. One is that the U.S. side is pushing for access to Indian agri and dairy sectors. And this is something that is not completely agreeable on the terms they want. India, on its side, we learn, is seeking concessions for labor-intensive sectors like leather and toys manufacturing, and that is the access that the Indian side is seeking for these sectors and this produce that comes from India. So even as we head to that July 9th deadline, even as President Trump is announcing that, we're very, very close to a deal. We heard from the White House this morning that there could be a deal anytime now. We are now learning that the stalemate very much continues as hectic negotiations are on.
Mm-hmm. Okay. Well, remember, thanks for that, Manav. Remember, there was an extension and one more, and the eventual date was supposed to be 30th US time. And now it is this. This is close to call, of course. Remember, 9th July is the flutter date, if you will. And it will essentially be a factor, Harsh, of the markets reacting in the run-up to that date and not necessarily on that date itself. And I think volatility could pick up, which is why I think Sudeep Bandyopadhyay was also mentioning that it might well be the case that because we've seen a bit of a run-up in the markets already, some smart money may want to take some chips off the table in that period, and then wait for your time. The markets have given you returns, take some money off the table, and then think of what to do next.
Okay, but Sudeep, so likely...
No, we have Pankaj, we don't have Sudeep anymore.
Oh, apologies. Pankaj, yes, you're right. So, Pankaj, would you also at this point look to take chips off the table? Is that what you're advising clients?
So our sense is that historically, say for example, July has been a very productive month for the market. It has on an average given returns about 2.5%. And I feel there are a lot of positives trigger which can sort of come in. Obviously, what we have clearly seen is that the crude oil prices have sort of have come down to nearly $68. On top of it, there is a good chance that probably some thing might come out of this bilateral trade agreement. Result season is expected to be okay compared to Q4, so you'll have stock-specific triggers. So we don't see, or we are not recommending people to sort of exit the market at this point in time. Our sense is that by another 3-4 months, we should be making a new high, and possibly levels like say 27,000 or 28,400 on the card technically in the next 3 to 6 months. So we're not advising people to sort of exit the markets or book profits at this point in time.